Hello dear traders, I'm Anna Kasachkina. You're watching the latest combined review of Forex and stock markets from InstaForex's. On Friday, the euro tumbled against its American counterpart, having shed 2.3% over the week. The reason for such dynamics was inflation below 1%. It fueled expectations that the ECB will slash the rates further. The single European currency sagged to $1.34.87 from its Thursday's level of $1.35.87, and the euro dropped by nearly 1% on Thursday amid the Eurozone inflation report. Inflation in the region was said to slow to 0.7% in October, which is the lowest reading over the past 4 years. The reading for October is below the target of 2% deemed as ideal. On the other side of the Atlantic, investors focused on speeches of the Fed's representatives, hoping for any hints as to when quantitative easing will be tapered. At its October meeting, the American regulator's economic assessment turned out to be far more optimistic than expected, so the issue of quantitative easing cutting moved back onto the agenda. It should be mentioned that monetary easing tends to push the dollar rate down. Charles Plauser, Philadelphia Federal Reserve President, said taper should have started in September. In his turn, James Bullard, CEO and President of the St. Louis Federal Reserve Bank, argued that the Federal Reserve should first see signs of a stronger labor market and then toughen the monetary policy. The ICE dollar index, reflecting the dollar's position to 6 majors, went up from Thursday's level of 80.221 to 80.744 points. Over the whole week, the indicator gained about 2%. Meanwhile, Wall Street started November in green as the U.S. Institute for Supply Management released an encouraging report. In October, the ISM Manufacturing Index rose to 56.4 points, the high since April of 2011. Let us dwell upon the stocks that were flitting. Chevron lost 1.6% due to the worse-than-expected quarterly report. In the third quarter, the net income of the company fell to $4.95 billion, or $4.95 per share. In the same period of 2012, it equaled $5.25 billion, or $2.69 per share. At the same time, Facebook saw its stock decline by 1% to $49.75 per share. The volatility in quotes was caused by its third-quarter earnings numbers unveiled on Wednesday. The data topped expectations. However, traders' joy was gloomed by the news that the activity of teen Facebook users dropped. Moreover, Facebook said it will keep news feed ads unchanged. And this was the latest combined review from InstaForex. Thank you and goodbye.